Welcome back, everyone, from the Wall Street Silver community. We have Simon Caron with us. He has a YouTube channel called The Uneducated Economist. We also have Jim Lewis and Lee Justo with us from the Wall Street Silver community. Simon, how are you doing today, sir?
Doing excellent. Thank you for having me on today.
Jim, Lee, who wants to get right into it?
I'm just curious how you got started in this. You're just driving along one day and it's like, I want to start a YouTube channel and talk about economics.
No, really, it actually, to be honest with you, if you were to have asked me about any kind of things involving economics about 15 years ago, I would have given you a blank stare. I had no clue about anything, the Federal Reserve, nothing. But I was working construction, 2007, 2008 hit. All of a sudden, I realized I'm out of a job. I cannot find work anywhere. I'm losing my house, and I'm watching the news, and it's like I hear the guys talking. I understand the words they're using, but it's like it's just passing me up, and I don't understand what's going on.
Mm-hmm.
So I finally went to my computer and I started typing in, what's a mortgage-backed security? What's a credit default swap? I kept hearing these things over and over again. Next thing you know, I'm picking up what the Federal Reserve is. And then my buddy comes to me one day and he says, hey, man, you ever read The Creature from Jekyll Island? I said, I don't even know what you're talking about. And he handed me a book that was about this thick. Now, I'm not very much into reading, but I started reading that book. And that's one of the few books that I can actually say that I have read. And man, once you have read that book, you can't put that information away. So that's really how I got started into it. How I started this channel, however, is I would just never stop talking. Like I would always be with my friends or at work, and I would just never stop talking about cryptocurrencies or silver or the Fed or something. And finally, people were like, "Man, you should need to start a blog. You need to do something." So I thought, okay. So I went out to my car right then, and I sat down and I did a video, and I introduced myself as the Uneducated Economist, and that was it. It was off and running.
Wow.
Yeah, I'm looking at your channel right now. You got 61,000 subscribers. You've got over 7 million views since late
Really?
2017. Um,
Wow.
and a lot of your videos hit 50,000 views within just a matter of days of you uploading them.
Wow.
Pretty impressive. You've got a pretty loyal audience there, and you
I
got a lot
do.
of things to say. Yeah.
Yeah, I have to say, my audience is one of the, I mean, of course, everybody would probably say that about their channel, but I really do have one of the best comment sections on YouTube that I have ever seen.
One of the things you've become most known for is your comments on sort of what's going on in the lumber commodities market right now, and you've been talking about that for years. And all of a sudden, this is your moment right now because lumber's just exploding in the past weeks or I don't know month or two. What's
Mhm.
going on in that market, and how does is it inflation? Is it a supply issue? What's going on?
Yeah, it's a tough one. It's a bit of a long story, but yeah, I've been tracking this one for quite some time. I mean, so really this kind of comes back to what took place up in Canada towards the end of 2019, and they had a ton of mill curtailments taking place up there. Now, it started off with this bug infestation, wildfires, a lot of stuff that created a situation in which that Canada can start producing a lot more lumber. And what they were calling it was salvage mode. Either these trees rot and die, or they cut them and mill them up. And that's what they did. They were cutting and milling them up. And all through 2018, 2019, they were pushing all this lumber into the United States. Well, that all of a sudden ended. The salvage mode came to an end. Tariffs were kicking in. There was a huge slowdown in the amount of lumber coming from Canada. At the same time, China was kind of giving us the finger on logs. It was like because this trade war was going on. So the United States all of a sudden had to start milling for themselves. Now, inside the United States, there was plenty of lumber, and we were just going into a slowdown because of the COVID pandemic crisis, everything going on there. So what ended up happening is that more mill curtailment started taking place because everybody figured that there was going to be no building taking place. Everybody was going to be sitting at home. So the mills started curtailing development again. This started depleting the inventory. All of a sudden, there's stimulus checks coming out. Everybody's locked down at home, and they want new decks, fences. They want to remodel the place. They want to, go and spruce up. And they started buying a lot of lumber. and it started wiping out that inventory. Well, next thing you know, the inventory is just completely wiped out. The supply from Canada is not coming in, and the mills here in the United States can't fill that pipeline back up. So now here we are sitting in a situation, the mills are pushing out as much lumber as they can, but actually filling in those pipelines, getting the sluices kind of, so to speak, filled up is not taking place. We have issues with trucking, issues with rail, issues with a lot of stuff that's going on, and the prices just keep going higher on the demand from the new housing construction that is taking place. So you can see, like, you can blame it on inflation if you like, because there's a lot of inflation to go around. But to me, this is more of a supply and demand issue.
I hear what you're saying. I've heard some crazy stories in the housing market where builders are not delivering on houses or completing houses because the lumber prices have gone up so much since when they started the house that they can't finish the house and make a profit.
You know, I know there's some situations that are coming up like that where, you know, like, because a lot of times what they'll do is they're like, okay, so you're building this house here. They just finished a house across the street that is very similar. That one sold for this much, so we're going to value your house at this much. But then the builder comes and says, you know, I'm going to have to show you my invoices because with all the lumber I just put into it, I can't make a profit if I try and sell it at that price. And now that's starting to come up is what I'm hearing. You know, it's just like the builder's coming to them and saying, no, it's not what you're assessing it at. It's going to be a lot more because I just tripled the price of how much, you know, how much money I have to put into framing. So
the appraisals have not caught up with where the lumber market is right now.
Exactly.
And then the banks can't provide the loans based on the appraisals. So yeah, the market's just sort of out of sync at the moment. Lee?
So where do you see this housing market going with all these lumber issues? I mean, it's been on fire up where I am, and people just fleeing the cities. And where do you see it going in the next year or two?
Well, the housing thing is going to really depend on the Federal Reserve and the interest rates and all that. I mean, that's really where it's going to end up going. Honestly, what I see, if things are kind of keeping at the pace that they're going, houses are just going to continue to go right on up and you know, past the moon. Lumber is not going to come down anytime soon, not that I see. So as far as, like, say the short term, like towards the end of summer, I don't see any change to what we have going right now. I think the pace is just going to keep right on going. When it does change, I think it's going to be a quick and dramatic one, but I couldn't tell you how far out that's going to be because everything that I see so far I don't see any signs of change, you know.
You would think that all those mills in Canada would be, you know, opening back up, or someone would be buying them out of bankruptcy and restarting them. Is that happening or no?
No, it's not happening because the British Columbia area has been depleted of their logs. They won't be coming back for 30 years.
Oh, okay. So you mean all the salvage logs? They're gone.
It's done.
Okay.
There's a place up there. It's really sad. If you can go back and find the articles from about 2 years ago from a place called 100 Mile. Oh man, that place that's it. That's all they had was mills, logs, lumber. That's it. That's all they did. And when that shut down, it was over. There was nothing for these people to go to.
Wow.
It was a sad story. And
Gotcha.
doing that research up there, I mean, it was like, after a while, it kind of took you to, you know, it's just like, I mean, there's obviously bad news everywhere you go, but it was just like story after story after story of families who are just like, these are fourth generation people who've been milling up there, and it's over.
The other side of the equation is obviously interest rates with the Fed and other central banks that are at negative interest rates in some of these countries. I'm sort of the opinion that they're in a debt trap. They can't raise interest rates. There's too much debt out there, both at the government level and the corporate level. If they even hinted that they're considering raising interest rates, the Fed funds rate, we'd see our entire market collapse overnight.
Yeah, I would have to somewhat agree that if they were to, especially if they were to announce that they were going to do something like that, yeah, you would probably see a collapse, you know, taking place, as the market shift would just be like, you know, too much for them to handle. I kind of wonder if they may not have any other choice, you know, come the future. I think they're going to do everything they can to keep the low interest rate, to try and keep the, you know, the flow of credit moving through the system. But it could come to a point where they don't really have any other choice, and they may be forced to raise interest rates just to keep the inflation at bay. I mean, really, you think about it, if they were to allow a hyperinflation scenario to kick in, then that would essentially just destroy themselves. I don't think that a private central banking system would do that. I think one that was working for a government might, but as far as just like a few guys who are together trying to, keep a business going, I don't see that they would allow a hyperinflation scenario to take place. And at the cost of the government,
we're headed towards 30 trillion in debt. Our economy is around 21, 22 trillions. We're getting close to 150% debt to GDP. Back in the late 70s or 1980, Paul Volcker was the Fed chairman, and he raised interest rates, to 18 or 20%. That's what it took to get inflation back under control. I don't think there's a scenario. I mean, we only had debt to GDP back then of 30, 35%.
Right.
I mean, our debt to GDP now at 150%. Imagine the interest service on the debt if they raised interest rates to 5%. I mean, they're having to spend more interest on servicing the government debt than we spend on defense.
I mean, I'm not saying that, that life out there would be happy. I mean, people would end up losing a lot of their government services and welfare and all that other stuff. I mean, trying to say that, everything's going to be hunky-dory out there.
Yeah.
I'm just saying that they're that they just may not have any other choice,
Yeah.
but to make it happen. Yeah, I'm not looking forward to it or saying that that's what's going to, but that's ultimately, people would pretty much lose everything that they have ever thought that the government was ever going to provide for them.
Simon, what type of physical silver are you stacking?
Yeah, I've been stacking silver pretty much since 2008, I think, is when I bought my first piece.
Nice.
And I have pretty much stacked every month ever since. There was been times in my life where I just couldn't, just for a couple of years, I just couldn't stack any, but I try to buy at least once a month. I tried to buy physicals, 1 ounce rounds. That's kind of where I head to. I try not to get anything over a 10 ounce bar because I just figure if prices really go through the roof, then I don't want to try and deal with, unloading that much at once. So 10 ounce is kind of like where I limit it out at. But yeah, 1 ounce silver, usually I try to get something well known that's generic. Sunshine Mint's one of my more favorite places to go to as far as, picking up their stuff. And and then American Silver Eagles, just because of how recognizable they are. So those are like my two.
Do you have any Canadian maple leaves? Because, Ivan's
Canadian maple leaves. And I try and anytime I'm at a coin shop or anything, if I see a Canadian maple leaf that they have priced right, then I'll try and pick one up just to add to the collection. So I do like picking up the Canadian maple leaves, and most of the time, if you can get them, man, they are just so shiny, man.
Oh yeah,
I just love that. It's man,
I only have the American Silver Eagles until today. Ivan, my first 10 Canadian maple leafs showed up in the mail today.
Oh, man, they're beautiful.
Oh, man, I couldn't believe the detail on that leaf, man. That's just badass what they did with that.
Oh, yeah.
It's really incredible. Yeah, I picked up one of the gold pieces too from a pawn shop a while back, and I was impressed on the detail even on a small 10th ounce piece that they have. It's really. I have a local coin dealer that I like to deal with, but I've purchased online. I've purchased through the online dealers. There's one here in Oregon that I like to use, Monarch Precious Metals. They have some really unique hand pour looking stuff, so it's kind of a little different from what your traditional, silver bullion pieces look like. Theirs look more like something that you would see somebody do at home or something like that. They're just really unique looking pieces.
Now, Simon,
Gotcha.
Are you invested in anything other than physical? Are you invested in cryptos by any chance? Bitcoin, Doge, or anything like that?
Yeah. Everything. I put the thing is that I'm trying to learn. Everything I do, I'm just trying to try and learn it. So if you have your hands on it, then you're gonna learn a little bit more about it. So anytime somebody else is like, man, you got to get involved with this particular crypto, the only way I'm going to ever learn anything about it is to go and buy $10 worth of it or $50 worth of it or something like that. Once you have it, then you start paying a little bit more interest into it. So yeah, I buy cryptos, I buy stocks, I buy silver. Those are my three. I stack cash. So those are the ways that I kind of been pushing my money. I'm not really an investor. I try to think of myself as a saver. because like I really don't know how to invest. Anything I've ever invested in seems to go the wrong way. So I just try and save my money, and I try to put it towards things that have little downside risk. So like when I go to buy silver, I try to like, I'll watch it for a while. It's at 26, drops down to 25. It'll be like, okay, so, it's probably not going to go down too much for more. If it does go down to 24, it's not a big deal. Maybe now's the time to pick up, 10, 20 ounces or something like that. So I kind of think of things like that. Same thing with cryptocurrencies. When the prices drop, when they have those huge dramatic 20% drops, then, I'll throw 50, $100 at it. Otherwise, I buy $50 worth of Bitcoin every single week, Thursday morning. And then I also buy $50 worth of stocks. I just buy a generic ETF of the stock market. So just to have some skin in the game and to watch it. And it's funny to watch like cryptocurrencies versus the stock market, because like I put the exact same amount of money into the stock market as I have into cryptos. And like the stock market portfolio has gone up like $150 and the Bitcoin's gone up like 110% or something, so it's like, it seems like, why do I even bother with the stock market? But
you've obviously thought a lot about the economy in general. Where do you see us going?
I relate the economy and what the Federal Reserve and the fiscal stimulus and all that other stuff that's going on, I relate it a lot down to getting high, taking drugs, getting drunk, something like that. And while it's going on, everybody's going to be loving it, and they're going to talk about how awesome it is, and it's going to be great. So the next 6 months, everybody's going to be like really high and doing well.
So you don't foresee the Fed taking away the proverbial punch bowl till 6 months from now?
I mean, I wouldn't even say it's going to happen in 6 months. I mean, it's going to happen at some point, but as far as like what I see and from what everything that I'm hearing out there, they're going to try and keep pushing that fiscal stimulus, like the infrastructure, the UBI thought kind of stuff. I mean, that's kind of where I see, the direction of what they're planning on doing. Ultimately, they just want to keep people motivated to spend, and they're just going to keep that carrot out in front of them. And as long as they can keep that going, then who knows how long that can last.
We just had George Gammon on about a week ago, and he described it as a heroin addict. Right now, the central bank and the government, they just keep feeding the addict more and more heroin. And at some point you kill the patient, that you kill the drug addict by giving them too much drugs. Or if you take away the drugs too quickly, you can kill the drug addict also. And that's sort of the analogy for what the central banks and our government is doing to the economy and to our country right now.
Yeah, but it's not just even you give them so much that they die, or you take it away and they die. Is that the moment that you say that you're going to take it away, they'll flip out.
Oh yeah.
You see, and so
that's a good analogy. The market will flip out when it loses its heroin.
When it loses the idea that it's going to lose its heroin, right? It's more of the credible threat. That's one of the things that I find from the Federal Reserve doesn't seem to do anything. They buy $120 billion worth of assets every single month, and then they jawbone a lot. They don't change. They don't really change anything about what they do. They just kind of say they are and say a bunch of stuff. It was something that Ben Bernanke had said back in the speech back in 2001 or something like that, where he had they knew that they were going to run into the lower bound. They knew it a long time ago. They said, we're going to run into this lower bound, and we're going to have a hell of a time trying to stimulate the economy by dropping interest rates. But he said, that's okay, because we can still stimulate the economy by using our words, by using, forward guidance. And he related it down to a guy who invents a gold machine. With this gold machine, he can produce as much gold at will with very little cost or energy. The moment that information gets out to the market, the price of gold on the market would just plummet. Even before the guy even produces a single ounce of gold or has the machine, just the credible threat alone that he can do it would be enough to change the markets. That's what the Federal Reserve is using every single day for their monetary policy, is all credible threats. They don't do anything. They just talk about it.
It's one big giant psyop, huh?
No, that's exactly it. And so, I read a lot of the Federal Reserve speeches and stuff, and everything that I've read from the Federal Reserve, they're not really so concerned about inflation. They're all concerned about deflation, and they say it repeatedly in their speeches. And so, to me, they know that they can raise these interest rates if things go awry, and they're not concerned about inflation taking off. So I don't know. I mean, a lot of people, everybody argues with me about it. They say that inflation is around the corner and it's on its way, and I have to question it. I think maybe not.
I forgot who we had a discussion with, guys, but someone had mentioned that it's not an all or nothing scenario. We could have severe deflation in things like housing and education, whatever that is, where we could also have inflation at the grocery store at the same time. So that's just another angle to think about.
Well, if you look at all the major metals, all the commodities, most of them are up 20 to 100%, or a number even more in the past couple of months, especially since the Fed went to 0% back in March of last year. So I just question how they can still pretend that CPI is legitimate or real, or anyone even takes CPI seriously at this point.
Yeah, well, no, and I totally agree because, like, everything out there seems to be going up. But I work in a retail business and I sell retail items every day. I watch the commodities flying off the charts. Lumber, I don't even consider that part of the inflation scenario anymore because it's just going crazy and it's way beyond anything that would ever be considered inflation. But now there's certain items out there that haven't moved yet. I have to question, why haven't those prices gone up? I mean, is it dollar destruction or is it supply chain constraints? Even when it comes into the food and people are like, man, look at all the food prices going up. Is it food prices going up or is a supply constraint taking place? Because I kind of wonder if this whole thing hasn't been COVID-induced supply constraint to try and mask over the serious deflation that we would be expecting or seeing. And instead, they're calling it inflation as they do this mass money printing. I mean, it didn't cause inflation back in 2008-7 or, in the first quantitative easing programs. So, I don't know how everybody is so convinced that it's going to definitely happen now, I mean, I just have a feeling that it's not the way that everybody seems to take it,
Mm-hmm. That's a really good point because I think I told this story on another video. I had gone fly fishing a couple of weeks ago. And I needed some items, so I went to a store up in the Catskill area, and I was talking to the guy behind the counter, and he was like apologizing to me. He's like, I just don't have enough goods because I can't get them. So It was definitely a supply constraint issue. It wasn't an inflation issue, and I think that's been happening in a lot of industries. I mean, we had that whole Suez Canal thing, and we had all those ships off the coast of California. My understanding is that shipping containers are just impossible to get right now.
Oh, yeah.
Well, let me ask you something. You were on that fly fishing trip. If somebody came out to you after you stepped out of that tackle shop and says, hey, man, I got some flies, would you be paying twice the price for them, 3 times the price to get the flies so that you could go fishing?
No, because I had enough.
Is that inflation or is that supply and demand? That dude has the supply and you got the demand for it. So, again, I think about it, it's just like, is this an inflation scenario taking place or is this more supply constraints? Once these supply constraints are done and the flow of material starts flowing again, starts going through, we're not going to see prices at, whatever, 1,400 per thousand in lumber. It's going to be much lower. I mean, the more realistic number is 500 per thousand. And even at 600 per thousand, that would be like incredibly high. So it could drop 50% and still be I looked at silver a lot, as part of like, why doesn't silver move? Well, there's all these paper manipulation that people talk about. And they also say, like, one of the things that I thought about was like, they talk about a silver shortage, like they were going to run out of silver. And I have to wonder about that because when it started running up in the Wall Street bet guy said that it was going to move into silver, the whole idea that, there's going to be this big run into silver. I couldn't tell you how many of my buddies came to me and said, dude, I'm going to sell when this happens. And I'm like, shit, I didn't even know you had silver.
Mm-hmm.
You know how many people came to me and I'm like, there's a lot of silver out here. I didn't realize how many people were actually holding. I talk about it all the time. They never told me,
Mm-hmm.
But so I have to wonder how much silver is out there in all the living rooms, very reminiscent of the, Crash JP Morgan by silver. Did you guys are aware of that campaign?
That was like 10 years ago, right?
Yeah.
What was it about?
Same thing. They were going to crash JP Morgan by buying up a bunch of silver and squeezing their short positions.
Well,
yeah, Max Kaiser was pushing it real hard.
Well, the problem they had back then was global mining supply was still growing. Every year, the mines were producing more and more silver. It was still on the uptrend. The difference now is all the mines combined around the world, they produced 900 million ounces in 2015. That was the peak. It's a bell curve. And ever since 2015, global mining supply has been in decline, way before COVID. By 2 or 3% every year. So the peak was at 900 million. In 2020, we produced 800 million. So we have a situation here where the mines are producing less and less because the average ore grade at silver mines is becoming worse and worse. All of the big, easy deposits have been mined out and depleted. So all the mines that they're finding and developing right now are generally smaller deposits, more remote, deeper, more expensive to mine. The issue is every mining supply is probably not going back up what the mines produce each year. And investment demand has skyrocketed. Industrial consumption, whether it's for solar panels, electric cars, whatever, that's going up. So we have this situation where demand and consumption for silver is at all-time records, over 1 billion ounces a year, whereas the mines are only producing 800 million ounces per year. So we're now in what's probably it's tough to say exactly how big the deficit is, but people are speculating we are consuming about 200 million ounces per year more than the mines are producing. And that's different now than it was 10 years ago. 10 years ago, the mines were growing production each year, collectively, all of them around the world.
And you also have to factor in all these Green New Deal things that are going to drive demand for silver through the roof, because so much silver consumption in electric vehicles, solar panels.
Yeah, absolutely. I mean, there ain't no doubt about it that there's only a limited supply of silver out there, and once the movement of people start getting into it, it'll wipe it out very quickly. Yeah. I mean, I forget what was it? What did it just take? Every American to buy 3 ounces of silver to wipe out the entire global mining supply.
Wow. What is your takes on the Great Reset? Everyone's talking about the Great Reset.
I don't know. I don't know what the Great Reset is. I mean, I don't know. To me, the Great Reset is going to be moving into that digital crypto era. That's what it's going to be. Everything's going to get digital, tokenized, and that's going to be the Great Reset once the Federal Reserve moves to a, central bank digital currency or something. Mm-hmm. To me, that's going to be the Great Reset. I don't know, like this. I hear a lot of people talk about like debt jubilees and stuff like that. Yeah, I doubt it. I mean, I don't think stuff like that's ever going to happen. Mm-hmm. But I do see where like things can get tokenized, and that would be like the Great Reset and all the cashless society kind of stuff that gets implemented.
Mm-hmm.
That much control by the government over how much you spend, they're going to get their fingers deep in everything that you don't want them to be involved in.
Absolutely.
And that's why I'm really, I hope there's some alternative to avoid it. I really just don't want to go there.
It's not a matter of choice. It's just a matter of time. It's going to happen, and it's not going to be a good thing for people who understand the system. Most people probably won't even notice that it took place. But for those of us who understand, we're going to see how they can track, tax, just shut you down, anything. But you can fight it, but it's not going to matter. It's going to happen. It's going to happen no matter what.
Well, if they do go to some sort of crypto dollar, digital dollar, if they still maintain the ability to create an unlimited number of them, they haven't solved anything. If they're creating a limited number and a sound crypto, whatever you want to call it, yes, okay, that might have some potential. But if they're just going to be able to invent as much crypto US dollars as they want, what have we fixed at that point?
It's not a matter of how much money they're trying to print. They're doing it because they want to go into a negative interest rate on deposits. They want to make sure that they can force you to spend your money and give you time limits and stuff like that. See, they already talked about this. This was what was it, an IMF blog or Bureau of International Settlements blog? Anyway, they talked about this a while ago. And they know that, like, if you have a negative interest rate and you apply that to people's bank deposits, they're just going to pull their money out in cash. And so you can't have like negative interest rates on people's bank deposits. So they know that this is going to take place. If they introduce a digital dollar, then they can have two currencies. They can have cash, and then they can have the digital dollar. Like when you deposit your check, you'll deposit it in digital, currency. This they'll put a negative interest rate on, so people will pull the cash out and put it in the mattress. So what they'll do is they'll charge you to take out cash, and they'll charge you to deposit cash. So it makes the cash as pointless to try and pull out, as might as well just leave your central bank digital currency and deposit. So that's how they're going to implement it, and then they'll just eventually just make cash such a nuisance that nobody will want it.
I've also heard that when they do some sort of stimulus, they'll put, like, let's say 1,000 crypto dollars in your card or fund, whatever your digital wallet, and it's going to expire. If you don't spend it within a certain time frame, whatever it is, 30 days, 60 days, it just disappears. So basically forcing spending, forcing activity through the economy through that method of use it or lose it.
Yeah. And, and I thought about it, like, you could even, you can also limit, like, you can't use it to buy alcohol or tobacco, or, maybe they said you can only use it to go out to restaurants to try and support restaurants and other places. They can limit you and force you to, make that happen. And like, they can direct the economy in certain ways by just telling people and forcing people to spend it in a time and in a direction. So
do you think we'll still be allowed to go to buy bullion, silver, with our crypto dollars?
Well,
probably not.
I mean, ultimately, the whole idea about central bank digital currency is that you can interact with anybody without having any issues with it. So if they were to start limiting, say, bullion or ammo, guns, stuff like that, then people would just like, never mind, So they have to have something that everybody's going to want to use and be encouraged to use it. And if you start limiting people right away with it, then they won't. They'll probably that'll be the first thing that you can buy,
Oh yeah, I could see silver, silver 1 ounce coins, Maple Leafs or American Silver Eagles becoming the currency of the black market, so that you could still buy whatever you want, despite what the government tells you.
Secretly.
I absolutely see something like that happening. And, a lot of people ask me that all the time. They're like, man, what are you going to do with your silver and gold or whatever? You can't spend that at the store. And I'm thinking, man, I have never had any problems when it comes time to unloading my silver. Now, I have been like, my silver stash is an insurance policy. That's the way I look at it. Now, a lot of people look at silver and thinking, man, I can't wait for it to go to $500. To me, I don't want to see that, because I am fearful of the environment that we would be in if that was to be the case. So I just like to buy silver and consider it my insurance policy. Now, I had a time in my life where I was very broke. My car broke down. I lived out in the country and I needed to get to work and I had nothing. And my buddy had a Tahoe that he was selling. I said, hey, man, will you trade some silver bullion for that Tahoe? And he said, yep. And I said, will you drive it up here? And he said, I'll be there in a minute. He came up. I handed him a handful of tubes of silver. He signed over a title to me, and I went, oh, that is cool. Yeah, I can't believe it. And so I thought to myself, man, I will never give up on silver.
He was probably so happy.
I would have been thrilled.
Yeah.
I mean, I was completely broke. I barely had any money to put in gas into the Tahoe to even drive it to town,
Wow.
But I had that silver and it backed me up, and I will never give up on that stuff. I mean, it has, it can do whatever it wants. I don't care if it goes to $15 or $500. It's, it's my stack. It's my insurance policy. It's what gives me the ability to sleep at night.
Yeah. You know the channel Yankee Stacking? I don't know if you followed that one at all. Yeah, he told us that he's up in the northeastern United States, and he was telling me he advises people to buy those pay a little bit of that premium, buy the national mint coins that are most recognizable in your region. Yeah. And for Americans, that would be American Silver Eagles, but also Canadian Maple Leafs. I think most people would in the United States accept a Canadian Maple Leaf as the same value as an American Silver Eagle. And people over in Europe, focus on the Great Britannias or the Austrian harmonicas, or as the coin most recognized there. Actually, an American Silver Eagle will probably travel anywhere in the world. I think
The
that's
American silver is probably the number one most recognizable silver bullion. As far as everything
yeah,
that I have ever read or looked at, that's it. That's the number one.
yeah.
I think you're pretty safe with any net, like a Krugerrand or
Yeah.
Koala. I think most people will recognize it.
Yeah,
Yeah.
you have a government issue and then you have generic bullion. And, if you're going with generic, you really have to know who you're buying from because, when it comes to selling, again, people want to recognize what the piece is and who it's from.
True.
And so that's why, like, when I buy generic, I try not to pay much of a premium on it. I try not to pick something like I have a couple of like fun pieces just for collection. But when I'm picking up like a stack of them, like if I pick up a whole tube of something, it's going to be something I recognize, something from, the Sunshine Mint, something from Atmex, or something like that,
Simon, this has been wonderful.
Yeah.
You really got a different point of view on
Thanks.
some of the other commodities compared to some of the other people we normally talk to on our channel. And I'd love to make this a regular thing and check in with you about once every 2 or 3 months about
that'd be
things.
awesome.
Because you're sort of a hybrid type of person for our channel. You're into silver, but you're also into other things and how it relates to silver. So that's a really cool perspective to bring to our audience sometimes, who probably thinks about silver a little too much sometimes.
To me, like the number one thing about silver and that insurance policy is that it gives you something that you can get away from the banking system with. Everything else is a third-party promise. It's an envelope, it's an app, it's something else. Silver is the only thing that's in your hand. You don't have to ask anybody about it. You don't have to worry about them paying you. It's yours. It's your possession. There's nothing else quite like it. So.
Well, I want to thank you so much, everyone from Wall Street Silver Community. And Simon, thank you so much for being with us.
I really appreciate it, guys. Thank you very much.